told you how India Ratings has downgraded Eveready's long-term credit ratings and placed it on negative watch. Concerns are now emerging on McLeod Russell, where sources say that employees at the Kolkata headquarters have not been paid for the past few months. Ritupurna Boyan, who broke that story, joins us with further details. Ritu, fill us in.
Well, employees in the McLeod Russell headquarters in Kolkata claim that they have not received salary for at least a couple of months. In fact, we have been told by these employees that as of May 1st, at least 2 months' salary is due, and there are huge concerns on this salary front. So much so that many of these employees at the headquarters are now contemplating to switch, look at other opportunities, move out of the company. Having said that, we have been told that while the employees in headquarters there are concerns on salary, the workforce of the tea garden, they have been paid, so there are no concerns on that area. But as of now, huge concerns on the salary front in McLeod Russell headquarters, as employees claim that they have not been paid salary for at least a couple of months. With that, it's back to you.
Thank you, Ritu, for that update. And this comes on the back of the financial stress in the group. Mangalam has details on McLeod Russell, while Sonia is here to tell us about Eveready. Sonia, you go first. Okay, before Sonia, let's go across to Mangalam on McLeod Russell.
Well, as far as McLeod Russell is concerned, the financial stress has been continuing over the last few years, as we will see. But in just this week, the stock is down 30%. This year, it's down 55%. And that coincides with a lot of financial weakness or stress points out there. Key one is the debt. From March 2015 to September 2019, the debt has increased from 374 to about 1,400 crores. So where could that debt be going is the big question. I was looking at their gross fixed assets. The gross fixed assets grew from about 1,500 crores to 1,800 crores. That's just about a 300 crore growth in the last 4 or 5 years. Not enough to justify the debt growth that has come in. The cash flows, they've been coming down from 169 crores. They came down to 83 crores. Did recover in March 2018 to 128 crores, but still lower than what they were in March 2016. Add to that, we have a lot of the loans to the group companies. This, I'm going through their annual report in 2018. Loans to group companies have increased from 34 crores to 86 crores in McNally Bharat, from nothing to about 82 crores in Williamson Maker, and from 73 crores to about 127 crores in Williamson Financial Services as well. Along with that, there was another company where called Sijuli Developers and Finance. From there, the loans also grew from 48 crores to 128 crores. Detailed research shows that, Kamal Kishore Baheti is the director of Sijuli Developers and Finance. So we'll keep an eye out on how this is panning out. The promoter's stake, that has been coming down from 49% to about 42%, though there has been some improvement out there. The promoter's stake pledge has also increased from 29% to about 38% itself. All of this marred with weakening financials of the company. So revenues for the first 9 months have been lower, EBITDA has been lower, margins have been lower as well, and the finance cost has increased. What is the company doing to mitigate all these issues? Well, they are selling their tea estates, which is their crown jewels. So they've sold about 12 of their tea estates in the first 9 months for about 472 crores. They had also entered into an agreement to sell those tea estates in September. That did not work about. So they sold their Adabari estate, Mahakali estate and Dirai tea estate for 150 crores to Lakshmi Tea after having a plan to sell it for 180 crores. So they did have an agreement to sell it for 180 crores. That did not come about. So they sold it at a lower price after the deadline lapsed on March 31st. So yes, there have been a fair amount of financial stress points. And this coincides with what Ritupurna just said to us.
Okay, all right, Mangalam. Thanks so much for that. Keep an eye out on the stock. The McLeod Russell stock should come up for you on the screen. It was locked in lower circuit earlier trade. And there was some big action. I'm wondering who would have been picking up those shares at the low point. But there were quite a few large deals that happened. Then the stock saw a bit of a recovery, but after we broke this particular story, again the stock has seen a bit of a downtick. It's corrected a tad bit as we speak. But Sonia joins us to talk about another group company, Eveready. Sonia, take it away.
Well, thanks a lot for that, Nigel. The financial stress on Eveready is also quite evident. Remember, India Ratings had gone ahead and downgraded the rating for Eveready. Now, just to give you the key numbers, the reasons for the downgrade, one is, of course, continued high leverage, weakened liquidity. They have extended financial support to a lot of their group companies, which is a big cause of concern, and that delayed asset monetization. So if you look at it, Eveready has debt repayments, immediate debt repayments of 140 crores in FY20. Their net debt to EBITDA continues to surge year after year. Currently, it stands at a little less than 3 times as on FY19. It's gone up from 2.5 times in FY18 and 1.6 times in FY17. So as you can see, there's continued financial stress over there. Not just that, during FY19 and FY18, Eveready extended the intercorporate debt of 134 crores and 76 crores respectively to group companies. Their interest expense has also increased over the last few years. So in the 9 months of FY19, they've had to, shell out interest to the tune of almost 40 crores versus 28.7 crores in FY18. All this amidst trying to raise money due to asset monetization, but that has not played out, so that's the big concern. Just a couple of more details on what the debt stands at the moment. Now, the last audited financial annual report of FY18 suggests that the debt has risen to 246 crores in FY18. As of Q2 FY19, it stands at 265 odd crores. This compares to about 150 to 180 crores in FY16. Even the return ratios have fallen substantially for the company. FY18, the return on net worth was just 16% compared to an average of 35 to 45% in the preceding 4 years. So the return on net worth has fallen substantially. And finally, promoter pledging. Eveready's promoter holding currently stands at 44.1%. Out of this promoter holding, 50% is pledged. So that's another point of concern.
Okay, in fact, talking about intercorporate loans, I guess the street is a bit concerned on Britannia as well on this particular issue. The stock, Britannia, is at the low point of the day. We'll slip into a very short break. We'll come back with more on the markets.
Slipped into the red as we speak. Britannia, as Rima said, that's under some pressure. IndusInd Bank, that's the other one that's moving lower. And Yes Bank as well is cutting some of its gains now. It's moved a tad bit low in the last few minutes. Few banking names actually. Let's pull up all these banking names. SBI, ICICI Bank as well as Axis Bank. All three of those banking stocks, they have taken they've taken a bit of a knock. IndusInd Bank is seeing selling after a 6% cut just a couple of trading sessions ago. So the Nifty Bank moves into the red. Things looking not very, very good, a little bit iffy as we speak. But we'll wrap up on this show. You stay with us. Business Lunch comes up next.